Well, hello everybody, and welcome to this month's webinar on building credit and obtaining bank loans in the USA. Tonight's webinar is going to be very specifically about this one process and one product. So I'm not going to show you a whole bunch of property, not going to tell you why to invest in the US. I just want to step you through what we've managed to achieve and the system that we now know will work for you. Many of you who were on the webinar will notice that this recording is slightly different. It's because I had a few audio problems. It's the second webinar in a row that's happened to me on. So I'm going to find a solution. I've beaten up GoToWebinar, but I'll make sure this doesn't happen again. But you get the benefit of this being my second run through of the content, so it'll be even better than the first time round. Okay, so without further ado, let's jump in. And this is not a normal US update. What we want to talk about tonight is how to borrow from American-based banks with a specific view of being able to refinance and leverage our real estate in the USA. Now, the thing that's caused me to run this now is that when I started about 3 years ago, probably going on to 4 now, we knew that the end game was to try and get to a point where we could borrow from American banks. Now, one of the components to achieve that is you need to have a decent credit score. And this is my credit score. You'll see that the Equifax is 739, Experian is 757, and TransUnion is 762. This is better than most Americans have, and we've achieved this in about 30 months. And what this means is that we've been able to build a credit rating in America, and that is one essential component for ever being able to borrow money from any banks here. So we're very excited to have achieved this. I set out with this goal in mind. We interviewed banks and different things, and we've now proven that it can be done. Now, what I'm going to do is step you through. It's hard to give you a sort of logical order. What I'm going to do is just step you through the things that you need to know. Now, you can do all of this yourself, and many of you who are listening will already have some of this done. So sometimes you might need to tweak some things, and there might be some things that you need to add. So let's start at what is arguably the beginning of the process, and that is you need to have ideally a US address. Now, this is not absolutely essential. Many international clients, the only address that they use is the one in their country of origin. But part of getting a bank to lend you money is to look as much like a local business as you can, and also for the banks and other institutions to be able to track your credit rating. It's useful if you've got a common address. Now, it doesn't need to be your own home in America or even a personal address. It can be a business. You might be able to use somebody who you know. If you Google registered agent or professional agent in America, there are businesses that will do it for you for an annual fee. Or in many cases, once you've got your first rental property, you may be able to use your property manager. Now, often what happens is that you might have your Australian or New Zealand or Asian address for your bank. You might have your local taxes going to your registered agent, and you might have something else going to your property manager, or you can be a bit all over the place. Now, that doesn't really matter, but because one of the critical steps is to build a credit rating, it is critical that the US agencies can find you. So if you have everything going initially to a common address, that will help. My surname's pretty unusual, but let's say you're a John Smith in America and you're using different addresses. They may not all get connected up by the US authorities because they're not very advanced when it comes to computer systems here. So even though you have a common tax number, I'll talk about in a minute, it's very helpful to have your own US-based address. What we do for many of our clients is we use a local address here in America, and then we forward the mail on a monthly basis or quarterly basis to you wherever you might be. Okay, so after you've got an address, another thing that you're going to have is a thing called an ITIN. Now it's for all intents and purposes, it is your personal tax number. If you are an American resident, you would have what's known as a social security number. If you're not an American resident, you need to have a personal tax number known as an ITIN. You have to apply for it from Internal Revenue Service here in America. And as part of that, as part of doing that, this is for those of you who want to try and do this yourself, you need to make sure that you get opted out of non-resident withholding tax. Now, this is a little bit of a process involved with this, and I would recommend that you let somebody like us help you, but you can do it on your own. Understand, though, that you need to have a reason for getting an ITIN. And so the way that we handle this is that we combine it with you purchasing your first property. So to do any of the things that I'm going to explain to you, for it to be of any value to you, you need to own or be about to own an American piece of real estate. Otherwise, you won't even be able to get an ITIN if you just apply for one because you feel like one or because you'd like one. So just understand that you need to combine this with the purchase of a property. It just needs to be one, but that is part of the process of getting opted out of non-resident withholding tax as well. Second thing that you need is an EIN that's known as an employer identification number. It is really just the tax number for your LLC. An LLC is a limited liability company, and we recommend that you hold your real estate in America in an LLC rather than in your own name. EINs do not need to be obtained in the same lengthy manner as is required for an ITIN. Typically, the person who sets up your LLC, your attorney, can obtain the EIN for you quite quickly. But you want a tax number for your company and you want a personal tax number. Now, I'm just going to repeat myself a few times to make sure we're clear. What I'm explaining to you tonight is what we have done and what we believe is the best way that we've found to get you in a position where you should be able to borrow from American banks. You don't have to do every step that I'm telling you about just to buy a rental property in America. So don't confuse the two. You don't have to do every little thing if you just want to buy a couple of rental properties. So, for example, you don't need an LLC or an EIN. You could own stuff in your own name. But as I'll explain later, when it comes to borrowing money and being able to borrow more, we believe it's advantageous to have a US-based LLC so that you have a local business presence rather than just doing it in your own name. The next thing that you're going to have to do before you're going to qualify from a bank is that you need to have filed some tax returns. So now, of course, if you have your tax number and you've got your piece of real estate here, you're going to be filing a tax return, but you need to have filed 2 of them before it's even worth considering applying for a bank loan. The main bank that we work with has advised that they want to see some history of you being a local business owner. Now, you're going to file a personal tax return, not a business tax return, and don't get hung up on that, but we advise people and set people up to have what's known as a single member LLC, also known as a single shareholder, or what we in New Zealand would call a single shareholder in the LLC. Now, in America, a single member LLC is called a disregarded entity. So that means that you will still file a personal tax return, and that's what you want to do. Now, the reason for that is that only a person can build credit. An LLC can't. Now, you can have a multi-member LLC and a couple of other different options that will still allow you can still file a personal tax return. You need to make sure that if you're doing this on your own, that your US accountant understands that you want to file personal tax returns even though you're operating inside a company. So it's not an issue if you have a single member LLC, but if you have a multi-member LLC or a C Corp or an S Corp, there are some things to understand. And as I've already said, you need to make sure that you file 2 returns before you think about a bank loan. The next thing that you're going to need is that you need bank accounts. Now, again, this is all about being able to borrow money from banks. So the first thing is you need to have a personal bank account and an LLC bank account, and they must be with the same bank. And you'll see here I've said Wells Fargo. Now, I'm not saying it exclusively has to be Wells Fargo, but when Raymond and I were first exploring this and we interviewed some banks, sat down with them and discussed where we were heading and what we wanted to do, and Wells Fargo is the only bank that we believe will lend to foreign nationals. There are small regional banks in different cities and states that will potentially lend to a foreign national, but in terms of the major banks, Wells Fargo is the only one that have said that they are a relationship bank and they will potentially lend to a foreign national. So you need to have a personal bank account and an LLC bank account with Wells Fargo. The reason for having both is that because Wells Fargo are a relationship bank, they want to see that you are putting your business finances with them and your personal finances with them, and they look at their total relationship with you, and that is likely to score you more brownie points to be able to borrow money from them. The other reason to have joint accounts, in addition to the relationship side, as I've just mentioned, is not actually related to borrowing money, but is just another piece of jargon for you to understand, is that it is frowned upon by the IRS to be commingling your money. What that means is, let's say you come over here for a holiday and you also happen to have a LLC with a rental property in it. If you start paying for your tickets to Disneyland out of your LLC bank account, IRS will say, well, you're intermingling personal and company funds, and that can have some tax implications and things. You're not going to go to jail, but it's just a bad idea. So you want to keep your business finances in one basket and your personal finances in another. But the critical thing about it for us is that we want Wells Fargo to be able to see, oh yes, these people, we have a good relationship with these people. We have their personal finances, US-based finances, and we have their company US-based finances. And on the bank account side, never overdraw, never go outside of the boundaries of what you're meant to be doing. Don't exceed anything, and don't do anything strange. All of that can potentially knock your credit rating. And the last thing, which is again is not specifically about getting money out of the bank, but monitor the fees. We find often when we first set up accounts that even if they are a fee-free account, that often they are inadvertently being charged fees. So with our clients, when we set you up, we make sure that we set it up in such a way that you shouldn't be paying any fees, but you need to monitor that. And normally they'll credit it, it's no problem. It's just a very clunky US-based banking system, and so whenever they seem to go into your account and change one thing, it seems to change 3 other things, and so sometimes it can take 2 or 3 months to get that tidied up. And the next thing, so this is now one of the critical things. This is now, just before I explain this, the whole thing about getting money from the banks is about 2 things. One, it's about getting your physical credit rating high enough and knowing how to be able to score the points to get they refer to it as your FICO score, to get your FICO score above about 750, so that you shouldn't have any problem being able to borrow from a bank in terms of actually qualifying. And then the other side is doing the other things that you need to do because you're a non-resident, to put yourself in a position where the bank is willing to take the risk, if you like, of lending to you when you don't live here. So what we're about to talk about now is one of the sort of critical factors that does 2 things. One is that it increases your relationship with the bank, which is a real bonus, and this is one of the things that specifically will build your FICO score. This will build credit. And what that is having a credit card. Now, we would like to be able to just go and get you or help or assist you or you yourself to get a credit card from the Wells Fargo, but that is impossible because you don't have a credit rating, and so they will not give you a credit card. But what we can do is get you a secured credit card, and all that simply means is that you take a sum of money, put it on term deposit with the bank, and they give you a credit card, the limit of which is the same as the money that you've got on deposit with the bank. Now, it does not matter. This is a box ticking exercise to help you build credit. So it does not matter how high the level is on your secured card. It could be as little as $100, could be $1 million. It makes no difference. We generally do most of ours at around $500, just so it's actually sort of usable if you want to use it, but you're not going to build credit any faster by having a $5,000 limit or a $50,000 limit. The thing that is critical is to understand the 30% rule, and what the 30% rule is this: you must not ever be drawn down on your secured credit card more than 30% of the total possible balance of that card. In other words, if your limit on your card is $100, you must never have spent more than $30 on that card. If your limit is $1,000, never have spent more than $300 in a month. If your limit is $500, then it's whatever it is, 160 something. So you just need to use your card to do something every month. Now, it can be as simple as what I did was I joined a forum here in America that charges a $5 a month monthly fee. So I just have an automatic payment or a direct debit from my check account to pay off that to pay that loan, to pay the charge on the credit card, and that basically is all I use the credit card for. Occasionally I'll use it for something else, but the whole idea is that it doesn't make any difference whether you use it 10 times a month, 1 time a month. All that is going to build your FICO score is that they see that you have used the card and you've paid it off on time and you've been under 30%. Okay, so I hope that's very clear. So that's what you must do. I have a friend who, when he got his secured credit card, he was an Australian, but he's now living here, and he's been trying to build his credit score. So he was maxing his card out and then paying it off every month, because in Australia that would be a good thing. In fact, the bank would come and offer to up your limit when they see that you're paying it on time. And I think he managed to reduce his credit score by 50 points over 3 months. So you must not abuse the 30% rule. Now, the other thing that is a very specific credit building product that we like is we have a credit product. I need to explain it to you. When I say we, it's a product that we like to use. You can hunt them down yourself or you can let us help you. But what it is this. What you're actually doing, in the case of the one we use, is you are paying $10 a week into a savings account with a credit union that reports to all 3 of the credit agencies. The documentation that you sign is for a loan product. So the documentation says that you've taken a $1,000 loan, and you're going to repay this loan over 2 years. In reality, all you're doing is paying $1,040, because it's 104 weeks, into your own bank account. Now, this is not dodgy. It's not some grey, shady thing that this credit union is doing. One of the things that they have in America is products that they develop to help Americans repair their credit. So this is one of those products. So this will significantly help with building your FICO score, because this is now showing as a loan and you are paying it off over 2 years, and so that does wonders for building. You don't have to wait the whole 2 years, but that will consistently build your credit score as the payment is shown every month. Now, if you go off and do this on your own, just watch out for scams. Now, scams is a little unkind. What I mean is that in America, if you've got, I think it's $1 million cash, basically, it might be more, but sort of anybody can set up to be their own bank or their own credit union. So you just need to be careful that you don't start paying money into an account of somebody whose only branch is in the spare bedroom, and they could vanish with your money. So stick to reputable companies of some size if you go and source this product on your own. And next thing that will specifically build your credit score is the right sort of what they refer to as hard money lending. Now, those of us in the Antipodes would refer to this as mezzanine funding or finance company money. In America, they call it hard money. I have no idea why, because it's no harder or softer than any other money, but that is the money that we use when we initially come into the US market, is we will borrow 50 to 60% of the purchase price using hard money. Now, one of our suppliers of hard money reports to all 3 credit agencies, and I had one of these loans. I do not know how much it contributed to my building my credit score, because I didn't know at the time that I took the loan out that they reported. I only found that out more recently. But we would always encourage people to have some lending. In America, you might as well take advantage of the leverage that's available, and our clients are all pre-approved for that, and probably 95% of our clients would qualify from this particular lender. So we have a lender who does report to all of the credit agencies. Now, again, your credit score is just going to increase as each monthly payment is reported. the only thing I would recommend is that don't pay it off early. You want to let it run till your credit score is high enough. Now, once your credit score is high enough and you can then borrow from a bank, in other words, Wells Fargo or another bank is saying, yep, we'll now lend you give you 4% money, then you pay this loan off. So I'm not saying you have to let it run for the whole 5, 7 or 10 years. What I'm saying is don't do it for 6 months and then pay it off early because you're sick of paying the interest. You need to let it run until it's built your credit up high enough to make a difference for you. Okay, next thing is to understand credit checking. Now, because we're not American residents, we don't have a social security number. We are operating from this ITIN that I talked about earlier. Now, one of the problems with that is that the credit agencies cannot find you. I've rung all of the credit agencies in America, given them my personal tax number. Wells Fargo, I was talking to them some months ago now, and I said to them, will what I'm doing with you be building my credit? And they said, oh, absolutely, we'll be reporting your credit rating. I said, okay, great. How do I find out? And so they gave me the number of the credit agency. I think it was Equifax was the one that I rung first. I ended up talking to all of them. Anyway, they basically could not find me in their system because I didn't have a social security number. So you need to understand that you don't want to be checking your credit all the time anyway. I'll explain why in a second. But in reality, if you go online, there are hundreds of websites that offer you 1 to 3 free credit reports a year, and they say we will track your credit score, blah, blah, blah. Well, they can't. You have an ITIN, they only know how to operate with a social security number. So the way to check your credit is that once you've been doing the things that I've just been explaining to you for, let's say, 2 years, you apply for a loan with a bank. And for some reason, miraculously, when the bank applies for your credit rating, they can get one. So that's how the one that I showed you on screen at the beginning, that's how I got it, was from the bank pulling my credit score. All right, so the first time you apply via a bank. Now, once you get your copy of your credit report, as I showed you earlier, you then can ring the credit agencies and you can quote them the numbers that are on the report that you've got from the bank, and suddenly, magically, they can find you. I don't know why that's the case, it's just that it does. Right now, and the last thing on this is to understand that for some reason, every time you get your credit score checked, it lowers your credit score. So you don't want to, even if it's a friend who works in a bank or something, they say, oh, look, I can pull it for you. Every time they do that, it is going to lower your credit score. So you don't want to be doing that any more than necessary. I would recommend don't do it more than once a year. If you follow the steps that I'm explaining here, and whether you're doing it yourself or we're working with you, we would advise you just wait 30 months, then apply for your first loan. And as long as you've done what we've have suggested, your credit score should be high enough. So you don't need to go checking all the time anyway. It's going to take 2 to 3 years. There is no way to circumvent that. All right, so you don't need to suddenly be worrying about, is it working? If you're doing the things that we're telling you and you're not doing anything adverse, it will be working. Now, one of the things about that, just to let you know, because it's good news for you, is we have a regional bank that will lend to foreign nationals. I've been approved for my first loan, and they have their own foreclosures, houses that they've had to take back, and they completely rehab them, and then they will sell them, and they will provide finance to foreign nationals as long as your credit score is okay. And the loan that I've been approved for is a 30-year loan with a 4% interest rate. So that product is available for you as soon as your credit score is high enough on their own inventory. And they're in 3 or 4 different states. They have a little bit in Memphis, not so much, but they have a little bit here. But so what we can do on your first one, when you're ready to go, is look at what stock they have available and enter into a sale and purchase agreement for one of their homes subject to finance. And then they will pull your credit report as part of that process. Okay, and the other thing you can do is that because you've already got a property, and some of you may have several, I know many of you on the webinar have got lots already, pick one of the houses that has the most equity in it and apply to Wells Fargo for a home equity line. So you're not applying for a first mortgage in the sense of wanting to 100% refi out. you're just asking, could I borrow any money against this house? And again, as part of that process, which is basically free unless you draw down a loan, they will then go and pull your credit report. So those are the two ways we would recommend to be able to find out what your credit score is initially, and then from there you can use the identification numbers on that report to set yourself up with the credit agencies. Now, please remember this. We cannot guarantee that you will get a loan because that's up to the banks. We aren't the bank. But what I can tell you is that we've been approved for our first 2 loans. And I have my first unsecured credit card arrived in the mail, and so that means that you're in the system. Now, we have no reason to think that you shouldn't be able to borrow, but of course the banking system is up to the American banking system. But we've proven that it can be done, and if anything, credit's never tighter than it is now. So if anything, it should relax. So the critical things are credit score high enough. Now, on that, I forgot to mention it earlier that one of the funds that I work with, Jim Reedy, who's our main man for property management, he had one of the heads of Citibank in his office recently, and they were talking about the banking system generally and people being able to borrow again because that's good for the housing market. And her comment was that a few years ago, I'm paraphrasing here, that people who had sort of a bad credit score of 560 plus could often get loans if there was a reason for their bad credit rating, and then the banks would then not look at it below 600 and then below 650, and then you needed to be at 700. And she was saying in this meeting with Jim recently that most of the main banks now are going to set their minimum credit credit score at around 750 to qualify for a loan. So what we're teaching you to do here is really critical. We need to get you, so I'm at 764 in under 3 years, and that's exactly where you need to be, and that's why we got approved. Okay, now I have a number of questions that were sent in on the live webinar, and so let's go and answer those because they were great. All right, first thing is a secured credit card a debit card? So just to be clear on that, no, it's not. A debit card is like an ATM machine, an FPOS card, and that is where you are spending your own money. A secured credit card is where the bank is providing you credit. It happens to be secured by cash that you have with the bank somewhere else, but they're definitely not the same thing. Next question, do we have an accountant in our company or can we recommend one? We have very good accountants in Memphis, and we also refer people to accountants in New Zealand, if in particular those of you from New Zealand, to make sure your New Zealand end gets sorted out. But yes, we can help with that. Question, does it take a total of 2 years before you can get a loan? Well, as I've said already tonight, it will take a minimum of 2 years. It is about having filed 2 tax returns. This is sort of absolute minimum. Having filed 2 tax returns and having your credit score high enough. Those are the first 2 hurdles for it to be a possibility for you to secure a loan. Great question here. Is it necessary to get a hard money loan to build a credit score to the required level, or will the relationship and secured credit card, etc., be sufficient? Great question. The answer is it is not necessary to have a hard money loan. But I would comment on that and say that let's say somebody's got 50,000 US. Rather than just buy a property for 50,000, there's nothing wrong with that. Buy a property for 50,000, great. But why not buy 2 properties for 50,000, putting 25 down on each, and have your principal and interest loan, your hard money loan, is starting to pay those properties off while you're ticking away your 3 years. So you've got no more skin in the game. You've still just got your $50,000 in, but you've now got $100,000 worth of property, and could be more depending on the equity. But in that, let's just say that it took 5 years. You had a 5-year loan and it took 5 years. With that same $50,000 on one property, at the end of 5 years, you've had the cash flow, which has been great, and you own a $50,000 property. If you borrowed 50%. So in other words, you borrow 50,000 and put 50 in. At the end of 5 years, with no capital growth and everything being flatlined, you now have $100,000 worth of property, and you've only put 50,000 in. You haven't had as much cash flow because the cash flow's gone to pay the property down, but you have doubled your money. You've gotten a 20% return on your cash in that 5-year period, and you've also had some cash flow, and of course we would hope for some growth. So my advice is use the hard money. When people hear 12% interest, they drop dead and fall down, but it's really not that bad when you put it into a spreadsheet. The amount of interest that you're paying is fairly nominal, and this is just part of getting you to an end game. What if the market shifts significantly over the next 2 to 3 years? Is it better to have 2 properties and have gotten the capital growth in them, rather than having bought one and then in 3 years you want to buy a second one and that $50,000 property's gone back to being 80, 90 or 100? So that's my advice. I was going to say ignore it at your peril, but that's not fair at all. I don't mean that. Next question. Does it matter which state the LLC is in? Short answer to that is no. The thing about LLC formation is that you want to be in a state where it's basically hard for them to be sued and hard for them to get at the assets. So we recommend Arizona, and we use Arizona for our clients. But there are a number of LLCs, a number of states that are quite good for setting LLCs up in. We believe Arizona to be one of the best for a number of reasons. Question, even if the banks have their own properties, why won't they lend without the 750 credit score? Well, it's because it's by lending people money who shouldn't have it that got America into this problem. So they're not going to be bent on that. They'd rather just hold the property. And you have to understand the reason for that. It's a bit hard to explain and simple and like real quickly, but the banking system here is very strange. In New Zealand, if Westpac, or whatever country, but I'll use New Zealand, if Westpac has $100 million in its vault and it's not out being lent, that is like having cash, not like having stock on the shelves. So the bank's going backwards; it's not making any money, right? So it has to lend that money out. That's its primary goal, is to lend money. Well, in America, the government underpins and funds the banks. So the banks never have money on the shelves in the sense that the government, for example, with a mortgage, if you get a mortgage from a bank, the bank can take that mortgage to Fannie Mae or Freddie Mac, which are 2 government-owned agencies, and get the full value of that mortgage back in cash into the bank. So the bank's not carrying any risk, it's the government that does. So an American bank will happily keep its stock on the shelves because the government will bail it out. That's very strange, but that is the case. Another great question. If we have a social security number, does that help us? Well, it only helps you if you've been doing some of the things that I'm talking about to help you build credit. If you haven't, then no, it doesn't. My nephew Matthew, Matthew is my nephew, but my nephew Daniel, who's recently moved to the States, he's been coming up here for a while. He's actually here with me right now in Memphis. He has had a bank account and a social security number for a number of years, 5 years, and his credit score is zip because he's never done anything to generate a credit score. So he's now having to do exactly the same things that I am telling you. Even though he's living here, he still has to go through that. Okay, next question. How much can this be scaled? Great question. Tom, the bottom line is that my understanding is this. Once you get above about 10 loans, the bank will start to view you as a commercial borrower. So it doesn't mean you'll have to stop, but it means that the amortization terms and the interest rates may change a bit. One of the other reasons that we want you to have an LLC and a personal tax number is that only a person can build a credit rating, but your LLC owns your real estate. So when you qualify for your first loan, what will happen is the LLC will borrow the money, and it will be personally guaranteed by you as the person with the credit rating. Now, as that LLC services that loan and shows itself to be a responsible borrower, the LLC will eventually qualify. It's not going to build a credit rating because it can't, but it will eventually qualify to be able to borrow money in its own right without you needing to personally guarantee it. So what that then means is that you can then borrow some money in your own name, and the LLC can borrow some money in the LLC's name. So our understanding, based on our research and with the banks so far, is that the person should be able to get 10 loans and the LLC should be able to get 10 loans. So how much can this be scaled? Before you will be looked at as a commercial borrower, which does not mean that you'll have to stop, we believe you should be able to get a total of 20 mortgages before you run into too many brick walls. Next question about credit cards. I've already answered that. Does it help if I've been in the US and had a Wells Fargo current account? Only if you were doing something to build some credit, otherwise no. Is this applicable to acquiring property outside the US? No, it is not. It is only for borrowing money in the US for borrowing US property. That's it. Answered that. How many properties? Individuals. Okay, so good question. If you have an LLC which is owned in the name of a bare trust rather than an individual, is it possible to still establish a relationship with the bank and build a personal FICO score? Now, I'm not a international tax and structuring specialist. All I can tell you is this. Only a person can build a FICO score. So whatever you're doing, with whatever it is you're doing, you need to be filing personal tax returns and you need to be incurring credit in your own name to build your personal score. Question, can we refinance existing properties that might have a hard money loan with Wells Fargo? Yes, that is exactly what we're doing. It's the whole point of this exercise. Next question, do I need to be in the USA to get this loan? No, you do not. That is why we are doing it. That's why we are having this webinar, because it's for people who are not in the USA. Okay. I've answered that. Can you open a USA account with a USA address right from the start, or must you open it with an overseas address first? Now, that's actually a question for my wife, who handles that. I believe that when we first set you up with a bank, you probably do use your personal information, in other words, your actual residential address, and then we change it afterwards. I'm not sure about that, but does it matter? No. My reference to that earlier about having the common US address is about making sure that all your credit gets tracked by having a common address. So that will just help. Can we have the PowerPoint? Yes, you can. That's why I'm doing this. Just a question about USA tax time. The end of their financial year is December 31st. Question about having an account with another bank, with Chase Bank, and do I know their rules about issuing credit cards? No, I don't. But as I've said earlier, the bottom line is we want you to be with Wells Fargo, in terms of that's how we believe you will get qualified. If you are with another bank, we know that Chase, US Bank, Citibank and HSBC will not lend to foreign nationals. Okay, LLCs need to be single member. I've sort of already dealt with that. Do private loans and lending count towards your score? Answer is only if they are reporting to the 3 credit agencies. If they are not, then no. Next question, can you use existing freehold properties as security on obtaining lending? Absolutely, yes you can. Yeah, I think we're just about through on that. I've answered that. Okay, all right, so I think we are just about done. Let me just jump back here. All right, so that's all of the questions. Thank you. There's been so many of you on the webinar too. It's been great. Now, there are 2 ways. You had a number of you ask me. I just didn't bother responding to your questions, so I was going to do it at the end. The whole point of tonight was not to sell you anything, and to be brutally honest, we we actually don't want to help you. I don't mean that we don't want to help you. I don't mean that at all. But the amount of time involved for us to work with you and to monitor things for you and just to get everything to sit in the middle and do all the paperwork and do all these things is very, very time consuming. They basically have 3 staff in New Zealand, and they are busy. However, of course, it would be totally strange and unfair of me to say, yep, this is how you do it, now go off and do it. And by the way, if you do it by yourself, I don't think it will work. So obviously I'm not going to do that to you. So there are 2 ways that we can potentially help you. Now, I deliberately haven't talked about other aspects of our business. We do supply investment property in Memphis, Tennessee. Been doing that for a number of years now, and have clients in various countries, and we're happy to help you with any aspect of your investing. But tonight is about how do you get to a point where you can get cheap money out of the US banks. So the first way we can help you is, if you're new to this, to take advantage of anything that I have talked about, you need to get set up and purchase your first property. So we can set you up from scratch, and the price on that is $3,999 US. That includes paying for your LLC, getting your bank accounts, helping you with a secured credit card, doing everything, and also helping you pick your first property and purchasing your first property. Obviously, the price of the property is not included in the $4,000, but we're not going to charge you an additional fee or anything for buying a property. So if you think you're sort of ready to get going and you want to take advantage of investing in the US for all the reasons that you've heard me talk about before, then that's the first way that we can help you. So we will set you up and get you everything set in place so that you can start building your credit and head towards borrowing from banks. Now, I know there's a number of you on the webinar who already have real estate in America, maybe already are doing your own thing, particularly the Kiwis and the Aussies. They like to do their own thing. They don't like being told what to do. So you may have found out from tonight that some of the things you're doing are not working, or that you're not doing some things you need to do. So what we're happy to do for you is to basically have a look at where you're at right now, give you an audit on that, and add in to what you're already doing whatever you need to do so that you can get your FICO score high enough and get to a place where you can qualify from the banks. It's $14.99, no other hidden costs. What we'll do is we'll look at your current setup and we'll put in place whatever else you need to get the end result that you want. All right, so everything I have told you, you can do yourself. You will find it to be a nightmare. I'm not saying that because I want you to deal with us. We've just had a number of clients who have done things themselves, ended up coming to us afterwards anyway. We've had people take 2 years to get their ITINs. We've had a number of people. It's very, very difficult / almost impossible to open an American bank account now unless you walk into a branch in America. It's because of the Patriot Act and the anti-terrorism and that sort of thing. We're able to get bank accounts open for you. So that's because we have a relationship of very high trust, and we take the time to make sure everything is done correctly. So you can do this yourself, and I'm happy for you to. But my advice would be, if you're serious, for the sake of $4,000 or $1,500, it's a very, very, very cheap exercise to get the results. The work that my wife and I have done to figure all this out is huge. If we charge you what we should, it would make your eyes water. So I think we're done. If you'd like any further information or any help with any of this, many of you already know how to get hold of me, but if you don't, you can email me info@turnkeypropertyinvestment.com, and if you've got further questions, I'll try and answer those. If you'd like our info pack, or you'd like an application to get underway with either a complete setup or the partial setup, or even if you'd like to have a consult with me via Skype, I'm happy to do that. So just contact me, and I will get things sorted for you. Outside of that, I thank you very much for your time, and those of you who are listening to the recording, you've had the more streamlined version because this is my second run over it, but everything that I've said is still relevant. The live webinar was 24 hours ago, and obviously happy to help any of you with anything that I can. I've got a couple of quite good properties that are just going unconditional that we are obtaining as well. So if you'd like to see what current homes we don't have big lists anymore. They basically sell the day I get them, but I've got a couple coming up in the next few days. So if you're sort of ready to buy and you'd like to look at some stuff, please email me, info@turnkeypropertyinvestment.com, or if you have other email addresses for me that you already know work, just email me through that is fine. So thank you so much, and we shall meet again. Good night from Memphis.